So today's our topic is wealth creation with tax planning. So I would request Mr. M.K. Krishna sir to start on the opening note.
Good evening, all of you. Elrigu namaskara. I'm really happy that Bullsmart Academy they have been repeatedly doing periodically on awareness and in depth. I mean more and more about the financial discipline, financial literacy, and further on the finance. And on behalf of SBI Mutual Fund, let me also thank Chinmay Hegde Dayanand from SBI Mutual Fund and once again Bullsmart Academy. In the last 2-3 episodes, we have covered on various topics and what is suitable for young investors, what is suitable for elderly people like that. Today's topic being wealth creation with tax planning. Yeah, we always say health is wealth and health is more than wealth. That's true, but you need wealth also to take care of all of us at different levels also. When it comes to wealth, yeah, wealth can be in the form of real money itself, and the wealth can be in the form of property itself. It can be in land, it can be in building, it can be in just a site, etc. Or it can be wealth can be even in movables also. I may be having a fleet of 100 lorries also. That is also wealth. But today's when it comes to wealth creation, I would like to restrict myself to wealth that is related to money matters. And the Bullsmart Academy also, they are doing the classes under Money Master. So connected to money only, that wealth I will be talking about. And coming to wealth creation with tax planning. Tax is a very big area. When it comes to tax, or whether it is a property tax, whether it is a wealth tax or a gift tax and other things. But now, since we are restricting ourselves to finance related wealth or money matters related wealth, so I will also connect only the tax related to that individual or the individual or whatever you call income tax or whatever is called a personal tax. I will remit by that. So I made it very clear how. So before, since we already lost some time now, I will try to rush up with in a faster note. The reason is, today I want, in the first 5 minutes, I would like to say something connected to the wealth creation, like 10 commandments. What is the 10 commandments? So as already the host has introduced, I want to say this one. I am not 70, I am 18 with 52 years experience. What is that 52 years experience? It is not just job experience. It is not just employment experience. Having been in the industry, having been in the banking, having been in the various other walks of life, the experience of failures of so many people, the experience of losing money by so many people, and the experience of some of them making some wealth over a period of time, all those things that comes as experience, that part I just consolidate and put it across to the audience who are present here. That is the one which I am sharing with you. That is the one I have connected as a 10 commandment. First thing is, if you want to be wealthy, first we should never be a burden to somebody. That's all. So never ever be economic burden to anyone. So indirectly, what you call a penny saved is penny earned. So when you are not burdening somebody, at least you have built a wealth or you have created a wealth so that at least you can. ಕನ್ನಡದಲ್ಲಿ ಹೇಳೋರು ಹಿಂದೆ ನಿನ್ ಕಾಲ್ ಮೇಲ್ ನೀನ್ ನಿಂತ್ಕೋ. So stand on your own foot. That's all. So that is the first wealth creation. At the same time, I lost my father when I was hardly 13. So at that time, those days, I'll tell you, they never had any cash flow. They didn't have surplus money and other things. They left only few single digit bank balance or etc. But I am telling my children, at least I should pass off my life and I should pass on the baton in such a way, no liability should be passed on to my children or my next generation. So the second commandment is, ensure yourself to not to pass on liability to anyone or to your own children, etc. Like that. So at least you can be peaceful. The third thing is, yeah, physical wealth and fiscal wealth, both are different. So many a time, we always say cash is king. That's all. So physically, if you have some wealth that is property, like it may be a land or a building, or it may be ornament or a jewelry, in distress, when you are in SOS condition, immediately you cannot dispose and get the money. At the same time, in the distress sale, the seller will be a loser and the buyer will always be a winner, etc. So just so have physical wealth as well as the fiscal wealth. They are say like head and tail of the same coin. So you have to balance in such a way. At the same time, I want to tell all the people what you do the savings, all those in the form of deposits, or all those things on the time tenure basis and the thing. Those are all savings only, whether it is a bank deposit, whether it is a post office deposit, all those things are saving. It's a form of deposit. But when it comes to investment, investment can be a movable, immovable, or a landed building, a property, everything. All those things are called as investment only. But ultimately, the savings as well as investment that comes to your wealth only. But we are touching today only the wealth, financial, money matters wealth only, because the second what you are dealing with is money master. So we are dealing with money related wealth only. So when it comes to money related wealth, when you want to build your wealth, so as a experience, as a mature person in this financial field, I always say, never ever speculate, never ever gamble in money matters and other things. If you speculate or gamble, ultimately you will grumble, I'm telling you. In my last 30 years, I have seen a lot of people, those who have made money, they must have made marginally, they won't express anything. But those who have lost money, they have become desperate, they are out of sight, they are out of mind. That's why never speculate and never gamble. At the same time, the class, what you are doing is money master. Correct. I'll say money is a good servant, but money is never a good master. Because money as a master, it may teach you so many bad things, ill things, and unwanted things. But if you use it as a good servant, it will serve everything. But if the money is used for a good wealth creation, etc., yes, that is the one which will take care of you till your last breath of life. That's all I want to tell you. And coming to the other point, I just explained as far as wealth is concerned, different types of wealth. So when it comes to wealth, as you finish off your academics at the school or a college, you enter your employment, you enter your profession, or you enter your job, whatever the case may be. So you have to maintain your timings and you have to maintain your punctuality and other things. So, but natural in a country like us, we cannot depend very much on the public transport. Definitely, we have to be on our own. ಒಂದು ಎರಡು ಕಾಲು ಬೇಕು, ಎರಡು wheelu ಬೇಕು. So you need steps as well as two-wheeler is a must. The first thing what you start is a two-wheeler. I remember I bought a vehicle some 35 years back for just 14,000 rupees, which was repaid in 7 years. Now, no vehicle in the present day, any good two-wheeler, even if you want to buy an electric vehicle, no, the minimum that is for electric vehicle, because that is the order of the day. That is the fashion of the day. The electric vehicle costs nothing less than 1.5 lakhs starting. This morning when I went with a friend in a Bullet, that is a Royal Enfield, he said, sir, that is the one which I came from the showroom. It is just 2 lakhs, he said. Oh, so 1.5 lakh to whether it is a scooter or a bike, it is 2 lakhs on an average. So as a fresher, as an employee, when you want to go in for a purchase of a wealth, that is a movable wealth, whatever you call, that is a vehicle. So definitely no banker, no financier, no lender will give you 100% loan on acquiring that wealth. So definitely they will insist for a margin of like 20 to 25%. So even for a 2 lakh rupee vehicle, for that wealth or whatever possession you are going to make, 25% means it's a question of 50,000. For a 2 lakh vehicle means it is a question of 25% means 50,000. So definitely for a new employee or for you when you career start, make a start career start, even 50,000 it becomes a very bulk amount. So definitely you need to meet margin. So the second message which I want to tell all of you is never borrow to meet margins. That's all I want to tell you. Among the several commandments, never borrow to meet the margin. So at least build the margin. So when it comes to a wealth, it may be a two-wheeler, it may be a four-wheeler, then it may be a housing, or it may be a bungalow, whatever you call. Every time that margin comes as a hit. So at least that component we should never borrow. So the very strong is never borrow to meet the margin. Build now to borrow later. That's all the message I want. So always keep in mind, all good asset always appreciates. I'll repeat, all good asset always appreciate. And converse is also true. Sometimes if the asset will not be good, it's definitely depreciate. Why I want to use that appreciate as well as depreciate, if since we are all salaried people, we always look forward as an appreciation. Whereas for a businessman or an entrepreneur, he will always look into buying something, keeping in mind depreciation only so that he can write off or he can reduce liability and other things through depreciation. We are not like that. So that's why then coming to the any deposit or something like that one, whether it is a bank or it's a post office or any government of India, any all those things, deposits and all, register. When it comes to investment, you monitor. Here you have to register, you have to monitor. Why? When it comes to investment, everything is a variable. Your original amount of investment or your the capital what you have put or put at the time of buying, even that price can vary, and at the same time the returns or the yield or whatever you call profit what you get from that also it's variable. That is why certain things are called fixed, the other things are called variable. So that those things I have made it very very clear. So in the field of finance, I am telling you, so although I have been a banker for 37 long years, I always say respect all, suspect all. In the sense, whenever you want to have either physical as well as physical, when somebody, a surgeon or a doctor, something, no, you have to undergo a surgery, and suddenly you will not go and sleep on a OT table and all. You will always go for a second opinion. You will always go for a second consultancy, never mind spending another 400, etc. In the sense, at least you want to safeguard yourself, want to show at least what you are doing is right. First, you have to be 100% confident. That's why trust and respect all, but you have to make your own survey because it is your hard-earned money. From that one, you are going to create the wealth or build a wealth. So coming to the tax point of it, I told you already the tax point I will be covering only on that income tax related. That's all I am telling you. Income tax related, that is a personal taxation. Since all of us, we are all working and we don't go to the other taxes like wealth tax or some other property tax and nothing, purely on the income tax related. So at the same time, I come across several NRI friends of my own only. Yeah, they would have been working from the age of 20, 22 till 45, 50 and all. At the time, what they do, they keep on acquiring wealth in the form of buildings or so many other assets, etc. And after some time, their net worth may be very big or very good net worth. But when it comes to the real face saving, to face the life, they say, Krishna, we are asset rich but cash poor. I'm telling you. Here I am telling you, when you cross the age of 45, 50 and all, so you should have your cash flow to make your day-to-day requirement. So cash flow should be there. So never put yourself in the position of asset rich and cash poor, etc. So in the initial stages, whatever you go on getting, you borrow the money to just buy the acquired, meeting your margin. So these are all the tips that is needed for your wealth creation from the beginning. So that is nothing but a financial discipline. So coming to how a wealth creation happens. So I want to tell all those who are here, overnight, no wealth can be created. Let us be very, very frank. So that's why I hinted earlier itself, never go for a speculation, never go for a gamble, etc., etc. Even if it is stocks, even if it is equity, yes, it is an investment. It is a long-term investment. Never ever for a half day or never ever for a full day or something like that. So you may win 99 times, but the last one time, what is going to happen? So that may choke you or that may croak you also. That is speculation and gamble puts a lot of people into problem. So coming to that, so wealth creation, direct equity is one part of the route, and especially those who are working or those who are have got a time schedule working and other things. So it is very difficult for them to monitor and maintain all those things in the form of trading and other things. Go for the indirect route. That indirect route is nothing but the mutual fund route. So that is why I always say mutual fund is a mutual friend forever for all the people. So coming to for a wealth creation, and you know very well as per SIBI, We have got a large cap, mid cap, small caps, and all. Those are all that comes under the MSME segment, that is manufacturing, production, processing, and all. After the corona lockdown and other thing, yeah, first 1 year there was a downfall. Now everything has picked up and all. Now I am telling you, now the market is in the full swing. And you know very well, as an yesterday, even today, it may be around 65,000 plus. That is a Sensex. And even the NSE Nifty is also around 20,000 approximately. So the markets are quite steady, and there are no likely chances of any ups and downs as far as the market is concerned. Let us have confidence in the market only. Let us continue to build wealth, that is financial wealth, trickle by trickle, drop by drop. Systematic plan is the best way as far as the salary people is concerned. And therefore, yesterday when I was addressing one particular cluster, they asked me, what is SIP? Yeah, the traditional expansion of SIP is systematic investment plan. But now I have changed that SIP also. Start investing perennially, start investing perpetually, start investing permanently. This is what SIP. Why I am telling you. So here, all those who are watching, somebody may be 22 years, somebody may be 42, somebody may be 60 years. But though I am also, once again, I'm telling, although I am at 70, even today I am making SIP. The reason is I had to do some tax planning also. That tax planning also I do through the SIP route only. So instead of burdening ourselves at the end of the year in the month of February or March to pay 1.5 lakhs towards tax saving products and avail the benefit of Section 80C, if I do through SIP mode, 8,000 rupees a month or 5,000 rupees a month, whatever that is possible through my pension, if I start investment, at least my burden at the end that gets reduced. So coming to the, since we are running short of time, because originally we are supposed to do from 4 o'clock to 5 o'clock, now only 3 minutes are left. So coming to the wealth creation through mutual fund, I suggest few products since I am representing now SBI mutual fund. So you may ask me, what are all the things, that schemes and all for wealth creation? So whether you make it in bulk investment, whether you go for a staggered or a piecemeal investment, or whether you go for a systematic investment plan. So I suggest 4 products, because very recently, about 15 days back, one of the ranking agencies or the rating agencies, they have come out for this particular fund house. SBI large and mid cap in the last 3 years, it has done consistently well. Coming to other one, Magnum mid cap also, mid cap, because when the market is going well, production is doing well, unless the mid cap companies do well, they cannot support the large cap companies. They are the providers of semi-finished and other things to the large cap companies. So one is a large and mid cap, second one is mid cap. And in the last 3-4 years, even the fund house has done a lot of shuffling and alignment also in the fair of contra fund and all. So why I am suggesting contra is, there are some particular stock picking, etc. It may not look very lucrative, or it may not be very good PE ratio and all, but it is likely to do well in the coming years and the years to come, etc. So a lot of research would have been done for that stock picking. So I would suggest contra fund also. In the contra fund in the last 3 years, it has given a CAGR of 41% return also. So SBI contra fund, SBI large and mid cap, and at the same time SBI Magnum mid cap. Mid cap was launched somewhere in the year 2005 and all. Within 1 year, at the time, 5,000 Sensex became 10,000. Within 1 year, I'll tell you, those who had invested in mid cap, they made almost 100% return on that one. So in the long run, mid cap also do well, so long as the economy and the industry and the manufacturing sectors are doing well. So coming to the other part of it, yes, and now the entire companies or the MSME sectors have been broadly divided into large cap, mid cap, and small cap. So when it comes to small cap, the first top 100 is large cap, and 101 to 250 is mid cap. Anything beyond 250 is small cap only. So the fund manager or the investment team and all, they have very big basket of more than 5,000 to 6,000 stock picking from small cap itself. Unless small caps produce a lot of things, it cannot supply to mid cap, and then mid cap further into large cap. So even the small cap in the last 3 years, it has given a good return of around 36% in the CAGR. So these are the 3-4 funds which I wanted to suggest you for your wealth creation through the mutual fund route, what has been arranged by the our Bullsmart Academy. Then coming to the when you make an investment, you have to think of three things. One is return on assets, then return on equities, then return. Ultimately you want good return, and ultimately the return should be in wealth creation, should be inflation adjusted return. It is only the mutual fund route which can give you mutual fund always gives a inflation adjusted return, provided you have to stay put. At least you have to stay invested for 5 years. Kindly keep in mind, any equity investment I always suggest for minimum 5 years. Am I clear, audible?
Yes, sir.
Wonderful. So I'll restrict myself regarding that wealth creation. What are all the schemes and other thing? I gave some 10 commandments and other. What are all the do's and don'ts in wealth creation? And at the same time, I had given a new definition. SIP means start investing perpetually, start investing permanently, start investing progressively. Why I am using the word progressively? Earlier, this facility was available, not available in the SIP. You have got a top-up facility, you have got a pause facility, and at the time you have got a bulk amount also, you can go bulk investment also. All these facilities are available. In addition to that one, even periodical or systematic, even partial withdrawal is also available, I'm telling you. So only thing, monitor. At the same time, any investment, it has to be monitored. And if the fund, some particular scheme are not doing well, you have to rebalance your portfolio. You have to look into it. Now all the fund houses, all the registrar, they give you portfolio statement and all those things. Sit with a advisor, because some of money matters also never ever do any self-medication like self-prescription also. Sit with them, pay some small amount as a fees, get the expert advice, go in for a good product, and ultimately good return. Ultimately, it is a win-win. It's live and let live procedure, even in the case of mutual fund, using the distributors and the fund houses, I'm telling you. Now I'll come to the tax part of it. I told you regarding with tax plan, wealth creation with tax planning. So when it comes to tax planning, yeah, I told you very clearly that is the individual tax or the income tax only, which I want to tell. Coming to the tax, most of the companies, most of the fund houses, most of the advisors, they always look into the tax related products or tax saving products only in the month of December, January, February, and all. I am very happy our Bullsmart Academy has done at the beginning of the financial year itself regarding tax planning also. What is planning and tax planning? There is a great adage, I'm telling you. If you fail to plan, it means you are planning to fail. I'll repeat, if you fail to plan, it means you are planning to fail. So when it comes to tax, etc., and you know very well, in the last 2 years, there are so many changes, structural changes in IT returns, IT return filing and all. And now the provision, there is a privilege for all the earning members, that is the employees or the salary earners. Hello, they are salary earners, saying that one you can choose for two types. In the sense, you can invest some money in tax saving products up to 1.5 lakh. You can get the rebate under Section 80C. And there is also another point that no, I don't want to save anything. I want to spend the money and pay whatever is the applicable tax, etc. And you know very well, in the last 1 year or 2 years, that 50,000 standard deduction has been introduced, etc. So when it comes to the one type of tax structure, you can invest up tax saving products up to 1.5 lakh, maybe in the form of NSC, maybe in the form of bank deposit with lock-in of 5 years, maybe in different PPF, that is the Government of India Public Provident Fund. Then coming to the mutual fund itself, like ELSS, Equity Linked Saving Scheme. Now it is called as Long-Term Equity Fund, etc. So any of them, there are certain restrictions and all. In a PPF, you cannot deposit more than 1.5 lakh. Maximum is 1.5. And one thing, they may give you return, that is every year credit the interest, but you cannot draw the interest. Coming to NSC also, NSC interest accrues, but you cannot draw the money. So only in the case of tax saving product, among all the tax saving products for your tax planning, the ELSS, Equity Linked Saving Scheme, that is savings. This is scheme of savings linked to equity, that is tax saving product, is the best for all the salaried employees, even for the professionals also. instead of looking for bulk investment in the year end like January, February, March, when you know that you have got certain directions like Provident Fund or it may be some national pension scheme, etc. Whatever is the shortfall of up to 1,80,000, you can spread over the 12 months and you can start on SIP for the tax saving product itself, I am telling you. So here, the one good piece of advice I want to give it to all the people. Now the filing of the return, when it comes to the month of July, you know very well, July 31st is the last date for filing of the return. So at the time when you have to file the return, you have to take into account what are all the savings you have done under a tax savings, etc., and what charities donation you have made, that section 80G and all. And at the same time, if you have got any dependents with disability and like a section 80DD, all those things comes into picture. So all those who are having an annual income or a taxable income less than 10 lakh. I would like to repeat here, be careful. All those who are having a taxable income less than 10 lakh, please go for the old method of availing that section 80C and park 1.5 lakhs for your tax saving product, and that is going to help you as your feeder for the future. And I know very well that beyond 10 lakhs, definitely they are in the 30% slab. Of all the taxpayers, 30% slab people are hardly 20%. Remaining 70 to 80% of them are they come under less than 10 lakhs category only. So since more people are in the zone, so please prefer, because every time you can change your option whether you want old section 80C method or the new method of this one. I suggest those who are having a taxable income less than 10 lakh, please go for availing the section 80C, avail that 1.5 lakh. At the same time, if you have borrowed the loan for even house building and other things, that interest and all those things, that is also benefited. In addition, whatever you are making for that NPS, National Pension Scheme, there is no restriction on that one. There also you can go for a higher. So make the best use of it. So why I want to mention about the tax is, sir, a last message I want to tell. You cannot avoid tax. You cannot evade tax. You cannot escape tax. You can only reduce your tax liability. I will repeat, you cannot escape, you cannot avoid, you cannot avoid all those things. You have to reduce the tax liability by planning your tax, etc., etc. So Section 80 is a good product. I'll tell you that ELSS product. Even today, I am also making under Section 80 ELSS product 8,000 rupees a month. So 8,000 into 12 months, it is 96,000, almost up to 1 lakh. So remaining other insurance premium, etc., all those things will take care of medical, mediclaim and all that will take care of 1.5 lakh. So wealth creation, at the same time tax planning, I have just covered. I know very well we are supposed to close at 5 o'clock. I already exceeded by 10 minutes. Although it is a technical hitch, on behalf of the Bullsmart Academy and SBIMF, I'll ask for apologies from the people who are attending. But still, we are helpless. That's all. Technology is technology. Technique is technique. Anytime that can give you heart, that is hiccups, etc. So instead of concluding anything, I would like to say, if anybody wants to ask anything, please go ahead, sir. Vishwadit and others.
Hi, sir. I believe means you have covered all aspects of wealth creation with tax planning, and the key takeaways I would take here from are like the current generation or younger generation have the definition of buy now, pay later, BNPL. So like the way you said, build now, pays later. I think that should be the true definition which they should take the key takeaway from this, and also the new definition of SIP. So I think you have covered almost all aspects with your 10 commandments for wealth creation, and apart from that, the tax planning is also very well explained.
The
So I
tax
think
lab making use of it.
yes. So I think for viewers, we can conclude here. Thank you, sir, for your timing, and again apologies from our side due to some technical issues we have experiencing. So that's why there is some on and off going on.
Thank you
Thank
all. Thank you, Vishwadit. Thank you, the host, Bullsmart Academy, and I'll thank my Chinmay Agde and all the colleagues also. And let us continue these master the money master sessions in different topics so that it is going to help so many people also. Thank you all.